Sunday, the 26th of March 2017. This is the chart update for the US dollar gold price. In the last couple of videos I've done in the last month or so, I've talked about the gold price being in a fairly sort of tight range below this 1250, 1260 level, which is the key zone from the US presidential election time frame, that sell-off that occurred in November. And you can't really see it on this chart, but if I take it to the futures chart where you can see some of the volume, you can see how important that time period was there around that 1250 mark. So we've been in this sort of consolidation zone below it, really stuck below, sort of stuck in this range between 1200 and 1250. And I think the price action this week, I'm getting a little bit more bullish. I thought we had that sort of run up after the US interest rate decision. There's been a bit of a run up, and I think these last few candles look really quite bullish to me. And the other thing was on Friday, I think, or last week in general, the US share market I think was starting to underperform. Had that big sort of 1.5% sell-off, which ordinarily is not a big deal, but given how there haven't been many sell-offs in the last 3 or 4 months, I think it started. There's a bit of a few cracks starting to show in the market's view of the president's effect on how if he can push share prices up and if he can get his agenda through. So I'm getting a little bit more bullish on the gold price. I thought, this sort of formation is kind of in general is not really a very positive formation necessarily. It's more of a neutral, but just given the trend here, I've got a feeling that it's building up for something. And that sort of couples with a couple of the other charts that I've talked about recently. The other one is the US dollar index. Now, in the video I've done a couple of videos on this in the last 6 weeks, and I'd previously talked about how I thought it was forming this head and shoulders pattern, and we had that. I think the last one I did was probably around here, around the 10th of March candle, and I was talking about how that sort of looked like it had broken that little trend line there. And sure enough, we've sort of kept moving down, and now we're really at crunch time for this head and shoulders pattern, and we're sort of getting some convergence of support and resistance levels around this 99 level. So in the next week or two, this is going to get decided which way this goes, and I tend to think it's going to break lower. And I think in the previous video I talked about how I thought that break would likely come with a break in the US share market. And just I know, as I talked about earlier, the Trump's plans on Friday night, they had the issues around the healthcare policy and how that wasn't getting through the House, and that's, I think, might be the first sign that the run up here has really been driven by expectation of tax cuts and stimulus, and the reality is that those things are the Congress isn't really positive on a lot of those policies necessarily, and he's going to have a lot of trouble getting them through. And I think the healthcare policy was the one that people thought would be if that could get through, the others would follow. But that's really a bit in doubt now. And you can see here there was this trend was kind of broken this week on Tuesday, that big down day I was speaking of, and I feel like that could be I think this is, and the next few days it really hasn't rallied a lot, and I think there's more downside to come here in the next week. Not saying there's going to be a major move, but it wouldn't surprise me for this to fall another 2 or 3%, and that's really breaking there's a lot of people aren't used to that in this market. You can see here we just got green candles almost the whole way up, and any sell-off here I think maybe it might be amplified, and it's definitely important in terms of perception. The other thing here, you can see we're in this range between sort of 1800 and 2150 for almost 2 years, and once we broke out of that range, we've really had a repeat of this move here, almost to the 10 points sort of thing. It's topped out there. I'm not saying it can't go higher, but that range is repeated, and often that's a sign that this has come to an end. So I'm feeling this could be the start of some downside here, and I think it really couples in with those gold and US dollar charts, and I think I'm quite bullish on the gold chart, probably the most I have been in the last last 2 or 3 months. I don't know where it goes if it breaks through here, but I think it. Then of course, this long-term trend line here is the downtrend line from the 2011 high. So that starts to come into play around 1280-ish, 1290. So that's the other one you want to look out for. It's hard to tell that's a bit of a ways off yet, but it wouldn't surprise me if we break through here, we start to rally toward that zone, and then that might be another pullback area. I don't know what the driver would be higher, but there's definitely a few cracks starting to appear in the US share market, and I think that's going to be the main driver of the gold price in the next few months.